What investors really care about is the Fed and when the data-dependent central bank may move on rates. Today, the head of the International Monetary Fund said not so fast. Christine Lagarde made it clear that she wants the Federal Reserve to delay raising rates until next year. And she's not alone. Other high-ranking officials are also expressing some concerns about moving too soon. Steve Liesman has more.
The International Monetary Fund not mincing any words today and urging the Federal Reserve to hold off interest rate hikes until the first half of 2016. The IMF said the Fed should wait until wages and inflation start to rise.
Muted inflation pressures suggest that interest rate hike can wait a little, and that such interest rate hike would be better off in 2016.
The comments are in line with remarks from some Fed officials like Fed Governor Lael Brainerd, who in recent days said that the economic weakness may be not all temporary. She urged caution in rate hikes. And today, Fed Governor Dan Tarullo said the economy had lost momentum. Tarullo said he's uncertain about whether the weakness is just temporary, but he said there are more questions about the economy now than there were at this time last year. Fed officials have said they're looking at two criteria to hike rates. First, whether the job market is improving, and second, whether inflation is moving back towards the 2% target. But recent comments suggest there's a third criteria. Officials seem to be waiting to see if the economy can handle what they call rate normalization, or a consistent march higher in rates towards a 3 to 4% range. In fact, in a recent speech, Fed Chair Janet Yellen didn't even call it raising rates. She called it normalizing policy, as in more than one hike.
I think it will be appropriate at some point this year to take the initial step to raise the federal funds rate target and begin the process of normalizing monetary policy. To support taking this step, though, I will need to see continued improvement in labor market conditions, and I will need to be reasonably confident that inflation will move back to 2% over the medium term.
That explains why the Fed doesn't just do a quarter-point hike and wait. It's a bit like a plane inspector who doesn't just certify if the plane can fly at 5,000 feet. The inspector wants to know if the plane is capable of handling the cruising altitude of 30,000 feet. Likewise, the Fed is not just judging if the economy can handle liftoff. It's trying to figure out if the economy can handle rate normalization before it acts. That's a high bar and could lead to a policy mistake. The Fed staying too low for too long, which some believe it already has. For Nightly Business Report, I'm Steve Liesman.